negotiating or renegotiating the terms and rent in your dental office lease. I want to thank our partners at Henry Schein for sponsoring tonight's event. We've been looking after Henry Schein's clients for over a decade now, supporting them when it comes to anything related to the dental office lease, whether you are a new start dentist looking to expand, maybe open up a satellite practice, or you have a renewal that's coming up, or if you're coming into looking to transition within the next sort of 5 years. And even if you actually own the building that you practice in, tonight's course will be extremely beneficial. So let's begin. I like to start my webinars with 3 numbers, 85, 54, and 80. Now these 3 numbers are quite important. The reason is that 85% of dentists have a lease that can prevent them from ever selling their practice. 54% of dentists across North America are currently overpaying in rent for their practice. And 80% of landlords structure their lease specifically to give them the right to at least 50% of the proceeds when a practice is sold. I just wanted to start with those figures. We will dig into a lot deeper into what this means and how we can look to avoid some of the liabilities that we see in a dental office lease. But first of all, I think it's really important to understand a little bit about us and Cirrus Consulting Group, who we are, how we've been representing the dental community for over 25 years now. Essentially, we're a healthcare and dental specialist tenant representation company. We were founded actually in Alberta around 25 years ago by dentists for dentists. As you know, it's extremely expensive business to enter into and can be a very profitable business to exit when it comes to transitioning. And what we found is that landlords were taking advantage of the healthcare and dental tenant. And since our inception, we've negotiated over 12,000 dental and medical office leases. Primarily, we look after dentists. I would say around 75% of our clients are dentists. We do deal with other healthcare practitioners, veterinarians, rheumatologists, general practitioners, veterinarians. And what makes us unique is we do everything in-house. So we have a in-house legal and leasing team, all comprised of lawyers, attorneys with a background in real estate and healthcare. And then I'm part of the consulting group. So I normally, when we're not in a pandemic, normally get to see each and every one of you on a face-to-face basis. So I'm one of the keynote speakers and lecturer across the country. Actually, probably around, I think this time last year, I was at the PDC. It was probably my last real bit of travel before we went into lockdown. So we do represent over 500 plus doctors throughout North America. And like I said, tonight's course is CE accredited. And we do deliver over 100 plus continuing education accredited seminars annually. And we do lecture at most of the major dental conventions, such as the Greater New York, Pacific Dental, Yankee Dental, the California Dental Association. We really work with dentists nationwide. So I asked my team just to pull a slide, which I think is extremely important. Just you may recognize some names, some of our recent customers that we've worked all across BC, from Surrey to Burnaby, Richmond, New Westminster, Victoria. We've really supported doctors right across Western Canada. So I wanted to just give a little market update. I've pulled some reports from some of the local areas. If you are interested in more of a specific, detailed, deeper dive into your location, please bear in mind that this doesn't take into account every specific type of building, size of property, but what you can see is the vacancies did start to come down when the rental rates rise. Rental rates are still pretty firm, but vacancies are starting to go up, and we expect that to continue in Richmond. Similar kind of pattern in New Westminster, and you'll probably see a similar pattern across the board here. I mean, in terms of some of the other key indicators that we're seeing, the retail sector continues to suffer from the pandemic, and lots of office spaces are now starting to emptying as business continue to work from home. And lots of healthcare professionals are starting to look at some of these retail opportunities, some of the strip plazas or that may become available, to take the opportunity to maybe move out of that office building so that they can have more of a more visibility. And the medical tenant is becoming more of an anchor tenant. Again, in Coquitlam, rental rates were certainly been on the rise since 2016 and predicted to continue to go up. The same for Burnaby. And if we look at Victoria, it's been pretty steady in terms of the vacancy rates, and rental rates are looking at, on an average, between around $29 to $32 per square foot. Vancouver, slightly different picture on the graph, as vacancy rates, even with the rental rates rising, vacancy rates have continued to go up, right, hitting a peak around now at 5%. So we are starting to see more vacancy rates. What you'll find is that there are certainly more incentives being offered by landlords. They're very reluctant to actually drop rental rates if they can help. If they can help it, they're more inclined to offer some more incentives, in whether it's free rent or some tenant improvement allowance to help with build out, or if you're committing to a long-term renewal. But as we found, everything is negotiable when it comes to rental rates. I mean, we, like I said, do a much more deeper dive into the actual demographic and the type of property that you currently practice out of. So we can certainly do that. So the purpose of today's webinar, we're really going to just look at the importance of the office lease agreement. We're going to look at some key terms and conditions within your office lease agreement. We're also going to provide some practical advice when it comes to negotiating lease agreements. And really, what I'm trying to achieve is not that you're going to walk away as experts, but really for you to just walk away or leave tonight's webinar with a good understanding of how important the dental office lease as a component to your business is to your practice. Without the dental office lease, without that sort of security and long-term, you're not a lawyer, you're not an accountant, you can't just move over the weekend. And I also want you to understand that it's not just about the financials. Clearly that is extremely important, and how much rent you pay and what that goes up each year. But it's not just about the first page of the lease. There's normally around 30 to 50 pages of lease agreements, which I read on a daily basis. And some of the legal provisions, again, we'll touch on them a little bit later on, really can have a real detrimental impact and a huge liability on your practice in the future. So I wanted to just talk about buying versus leasing, because that question does get thrown at me quite a lot. And many times I speak to clients and they've been renting for a long time, and they want to buy. They don't want to continue to pay rent. But there's not a great deal of, especially in BC, there's not commercial real estate is certainly at a premium, and many people who've been looking to buy for years and years are still leasing. So just wanted to look at some of the sort of pros and cons of buying versus leasing. So when it comes to buying, obviously it requires a large upfront financial investment, and you become a landlord. I think a lot of people don't realize that becoming a landlord, you can become a full-time job. If there's anything that was to go wrong with the practice, whether it was the plumbing or electrical, you are responsible for that. Now, yes, you can certainly earn rental income and capital growth on the asset. You do have a greater flexibility on how you use your space. You don't have to ask permission to do anything. You have freedom to control the property. Now, when it comes to leasing, you don't obviously require a large upfront payment, which can help cash flow, especially towards building out the practice. And one of the other things is when you buy a building, you may be in a fantastic location now, but in the future, situation in the area or the demographic changes. You're stuck at that location. You can't just pick up, relocate or expand. So when you're leasing, you have a little bit more flexibility. Obviously, you don't have as much freedom because the landlord is in control of the asset. But the main common denominator here really is the dental office lease. And one of the important things, whether you own the building that you practice in, it is still vital, and I can't stress this enough, it's vital that you have a lease, an arm's length lease that separates the building from the practice. Normally you set up two separate entities for this type of arrangement. But anyone, especially if you're looking to sell your practice in the future and keep the real estate, you're still going to need a lease. And when it comes to appraisal or valuation of that practice, they're going to look at the last 2-3 years of the lease, what sort of rent you've been paying to yourself. And, you know, is that a landlord-friendly lease, a tenant-friendly lease? Anyone that's going to buy the practice is still going to need to get finance, still going to need to amortize the loan from the bank over a period of time, and they're going to need a lease. And you're going to want to set some ground rules. If you're going to keep the building, then, you know, what do you want the tenant to be responsible for that actually comes into your building? So it's just a small snippet of how important the office lease is, even if you own your own space. So what is a lease? This is a question that I ask at all my seminars, webinars. I do like to normally get a reaction. Seeing as we're virtual, I'm going to tell you what a lease is. So from some of the actual, some of the research and some of the study that we've done over the years, it's actually a check. And it's one of the biggest checks that you will write in your professional working career. If you take away your residential property, and if we took an average 2,000 square foot, and let's say you're just purely based on the base rent, you're paying $5,000 per month. Now, the average tenant, especially dental tenant, stays at their space statistically on average for 22 years. Now, if we just take that $5,000, which is $60,000 per annum, $600,000 over 10 years, $1.2 million over 20 years, and if you're staying at the same space for 30 years, you're looking at $1.8 million. Now, that is not even including any additional expenses, any common area maintenance, any tax maintenance and insurance, any rent escalations. We're just talking purely the base rent. So when you look at that lease, and many people will do it, you won't be you won't be the last. You're not the first, and you won't be the last. You look at the rent and how much you're paying, and you put it probably in your drawer, and you don't look at it until it comes up to the next renewal. Now, if you were writing a check and you knew that check was worth 1.2 million, you would look at every single page, every line of that legal document that you are signing. Now, I know there's times where you build out a space and it's very exciting, and there's lots of other people interested, and you want to just sign the lease and get things moving. I really want to just emphasize how important that, one, that the lease is, and two, how important you are as a tenant, because I think that gets overlooked. So why is the office lease so important, especially during COVID, during the last year, what we've seen? Well, your office location is the foundation of your practice. If you were to drive up to your office, your practice, like you do tomorrow morning, and you got your Starbucks or Tim Horton coffee, you took a drive and you parked outside the front, and there was a notice, eviction notice, giving you 30 days to vacate the space, what would you do? What would that mean to your business? What impact would that have on your business if you were suddenly told by the landlord, you've been in default, you've been in breach of the lease, and we're giving you a 30-day termination notice? You're in a lot of trouble, because, as I said, you can't just pack up your equipment and move over the road or move down the road. Now, as probably many of your Shine reps who will attest and tell you what sort of some of the going rates are when it comes to building out a space. You're probably looking anywhere from sort of $150, $200 per square foot. So even if you're looking to build out or you're relocating, and there is certainly good opportunities. I'm not putting people off from building out or expanding, but it's an expensive investment. It can cost $400,000, $500,000 to build out a practice without equipment, and it can be time consuming, not just expensive, but especially in the current climate, it can be quite time consuming. Now the practice sell, again, as we will go touch on to this in a bit later on in a much deeper look when we look at some of the other provision. But when it comes to selling your practice, the landlord has certain conditions that will allow you to actually transfer the lease. So it's vital that you have a well-structured dental-specific lease with enough term, with the proper legal language that enables you to run a successful business and also gives you leverage when it comes to selling the practice and makes it much more viable and attractive proposition. So what are the three key sellable components of your practice? What does one look at if you're appraising your practice? So first of all, they would look at the equipment. Now, in some cases, when people coming towards retirement, they may not spend too much money or upgrading any of their equipment. Again, this can have an impact in terms of the cost, the value of the practice. If you continually upgraded equipment and gone digital, then that's obviously going to add value when it comes to selling the practice. The goodwill. So what do I mean by goodwill? So lots of people say, well, I've got 1,500 active patients. It really comes down to how many times those patients, especially in the last 2-3 years, how many times they actually visit, come in to the practice, whether it's for cleaning or routine checkups or whatever it is. It's really about the active patients, and also about how you as a dentist, how you are seen in the community. That location is all part of the goodwill, where someone's built up a legacy, and people come to see that dentist specifically in that space. Can be all part of the goodwill. But it's also important to understand that the value of the practice, and this is where sometimes, again, doctors can make mistakes, whether it not necessarily a mistake, but they come towards retirement, and they start to take a few days, start to work a few less days, start to work a few more days, maybe on the golf course to improve their handicap, or whatever. But it's just, production starts to come down in those last few years as they start to slow down. There's different things. Some people just want a clean, straight exit to sell their practice. Other people may want to bring in an associate that they can really mentor and make sure that someone is taking over their practice is going to continue their legacy and build in the community. So again, all these things are not set in stone, and they're up for discussions. But again, the main thing that can affect the practice valuation is the lease. because I can tell you now, if you have a lease with only 1 or 2 years left in the lease, and you have certain provisions, and there's quite a lot of in Vancouver, especially, where there's demolition clauses built into leases. It doesn't mean that you can't sell a practice if you've got a demolition clause in it. It's quite common in downtown, in Vancouver, and in cities like Toronto. There are lots of demolition clauses in there, but there are certain things that one can do to, make that demolition clause, if you can't remove it, certainly make it remove some of the liability, maybe extending some of the blackout or notice period. But the main thing is the lease. You may have a wonderful practice, lovely equipment, but if you can't assign or transfer the lease to another person or party, or it's going to cost you lots of money because of the way that the lease is structured, then it doesn't matter. The lease can have 100% impact on the sale of your practice. So what should the office lease do for you? If you had a magic wand and you could have anything you want in the lease, what would that lease look like? So to start with, you want it to provide fair and affordable financial terms. So what do I mean by that? So you want to be paying market rent comparable to other practices in the area. You do have to bear in mind that you will pay a premium as a dental tenant. You may see some for lease signs as you drive to work. The rent looks slightly cheaper on the outset, but again, a lot of these, like I said, landlords are offering incentives to attract new tenants to certain buildings that have got a big percentage of vacancies. So you want to have long-term stability and security. So what do I mean? What do I mean by that? So again, if you are investing $500,000, $1 million, or whatever it is into your practice, you want to make sure that you have the security and the long-term stability within the lease, that you can't be kicked out with 30 days notice or relocated. And like I said, anyone that's going to take over a practice, any bank would require at least 5 to 10 years of term on the lease to amortize the loan. We also want to minimize risk and exposure. So what do I mean by that? Many of you may have signed a personal guarantee when you first took over, acquired a practice or built out a practice. Now, again, when you've just come out of dental school, or when you're starting off in the dental career, you may not be well known in terms of financial credibility, and you may well have signed a personal guarantee, which, again, this is quite standard and quite normal. At that stage, you've probably got quite a lot of debt, not so much capital. So at that stage, it's not really an issue. The issue comes when you've signed a personal guarantee and you're now 10, 20 years into the same space, and you may have just extended or renewed the lease, and you continue to provide a personal guarantee. So, and I've seen it many times where doctors have had a personal guarantee and they're still providing a personal guarantee, and now they're coming into sort of mid-career, the latter stages of their career, and they're worth a lot more money. And they're signed. If anything was to go wrong, as in this environment that we've just seen in the last year, if you're providing a personal guarantee and something was to go wrong, the landlord can come after your personal assets, your house. So that's something that we certainly want to minimize that risk and exposure. We want to maximize our flexibility. So again, what do I mean by that? If you're in a space and you grow your space, your business is doing really well, and you may want to expand. You may want the opportunity to expand into the adjacent space. So you want to have a first right of refusal. You don't want to see a space next to you suddenly become filled by another tenant where you're thinking, well, that could have been perfect for me. It would have been perfect to expand next door. So you want to maximize your flexibility. In some cases, depending on the type of property, you might want to have first refusal to actually to buy the building. If the landlord is taking offers to sell the building, you may want to have that first right of refusal, or even just the opportunity to match the asking price, match the offer that's been put in front of the landlord. So that just gives you a little bit more flexibility. And then again, and I can't stress this enough, is just really enable you to eventually sell your practice, because we working with a client actually out of New Westminster who are selling their practice. They literally dotted the I's, crossed the T's, agreed everything with the purchaser, and then in the sort of 25th hour, they realized that they just need to get approval from the landlord to assign the lease. And landlord wanted 50% of the proceeds of sale. The landlords are quite savvy. They know that a large financial transaction is going to take place. If you're selling your practice for $1 million or more, and the landlord wants $500,000 to sell your practice, and it's written in the lease that they can take 50% of the proceeds, then there's not a lot you can do. In this example, the client actually ended up having to pay $117,000 just to get consent, because he didn't want to lose the buyer that he had. And to him, he was selling the practice for over $1 million, and he wrote a check for $117,000 to the landlord. Now, you may think that is ridiculous. Why should the landlord? I've been working 30 years, sweating, blood, sweat, and tears for a long time, and the landlord will argue, well, you've been at my space, you've been at my location, I've helped build out, your practice. But, there's one thing that we've been successfully representing and helping clients, because the landlords have screwed over many, many clients, and we've seen it, and we continue to see it, and we continue to try to put a lot of these preventative measures in so that you can not leave any money on the table. So let's look at what's in your lease. So I'm going to just go through a couple of examples. This is the option to renew, which is found in 90% of lease, the option to renew provision. So if you just take a minute to read this paragraph, see if there's any sort of red flags, anything that sort of jumps to your mind. So let's have a look at this provision together. As I said, this is the option to renew language found in 90% of dental office leases that I read on a daily basis. So the first line you can see, it says in this example, Dr. Joe Black, as long as Dr. Joe Black shall remain as the tenant. Now you can see that the tenant here is capitalized. And what that means is that these options are personal to Dr. Joe Black. Now, I was speaking to a client recently who's actually looking to sell his practice, and he told me that he has 12 years left of term on his lease, and he wasn't too concerned. When I actually got a copy of his lease and I looked over it, what turned out that he actually only had 2 years left of term, and he had 2 5-year options. But those 5-year options were personal to him as the tenant, whereby the landlord has agreed to give him the 2 5-year options, but they're non-transferable. He didn't give them to somebody else, because the landlord knows that if it comes to either selling the practice or transferring the lease, the landlord can quite easily say, well, I didn't give those options I gave them to you, I didn't give them to someone else. If someone else wants additional term or additional options, then they're going to have to pay for it. So it's important that the options are transferable, not personal to the tenant. Also talks about here is if the tenant has regularly paid its rent and has performed its covenants and obligations under the lease and not been in default. Now, again, when people see the term default, generally they think, have they missed a rent payment? Have they made all their rent payments? Have they made everything on time, or they're not in arrears? And that's default. But we were working well. We were approached by a very upset client that was in downtown in Vancouver. Had a beautiful corner spot of a retail strip plaza. She had been at the space probably nearly 20 years coming on. Wonderful tenant, never ever missed a payment. When it came to actually renewing her options, she would have a standard, a letter. She would give at least 12 months notice, even if only 6 months was required, that she was going to wanted to renew her options. And when we got involved, she basically was told that she cannot, the landlord was not going to renew her options, and she had a 5-year option to renew her lease. And the landlord had said that you were in default of your lease. And when we did a little bit more investigation, the landlord or the landlord leasing agent or lawyer, savvy representative, sent us an email with an attachment and a picture, and on that picture was a picture of the dentist's front door of the practice, and on that it said that the doctor, and it said opening hours Monday 8 till 5, Tuesday 8 till 5, Wednesday 8 till 5, and Thursday 8 till 8. Friday she was closed. Now, what had happened and what had transpired was that in the lease, under normal business hours for this retail strip plaza, the tenant had to be open 6 days a week for whenever the retail strip plaza hours were actually open. And they found her in default. Now, you're probably asking, why did they go to all this trouble if they had a perfectly good tenant who'd always paid their rent? She wasn't open on Fridays. What's the big deal? Well, I'll tell you the big deal. Actually, there was one word really and that was Starbucks. Starbucks had done their research and wanted that corner space. They were willing to pay extremely a lot more amount of rent, and the landlord, the savvy lawyers that represented the landlords, were basically told to look for anything to find this doctor in default. And they would not extend the lease, and she had to find another space. So it's just an example of when you read, if you think about being in default, there are numerous amounts of provisions in the legal, even when it came during to COVID, where people were in lockdown. There was a force majeure, there was a provision, but the bottom line is that you still had to pay your rent. So here it says, in no event shall the rent be less than it was in the original term. Even if we go through a crisis, what the landlord is putting in here to protect themselves, that the rent can't go down, even in the event of financial crisis or a recession. Basically, in this small provision, there's at least 5 red flags that can cause a problem when it comes to renewing the lease, when it comes to the option to renew language. The other provision, again, one of the most important provisions, is the assignment provision. This really just enables you or one to transfer or assign the lease, normally in conjunction with the sale or an acquisition of the practice. So this is found in 75% of dental leases. Again, take a minute just to have a little read through, see if there's anything that springs to mind. So here, you'll see at first that have to receive consent from the landlord. Now this is very common, very standard. The landlord's not just going to let you assign the space to any Tom, Dick, or Harry. It's going to want to know who potentially is going to be coming in to be in the space. Who's the new tenant going to be? Now, in this example, in this lease again, which we see in 75% of dental office leases, the landlord has 3 choices in this. It can, 1, simply approve the tenant's request to assign the lease. 2, simply can just decline the client's request to assign the lease. And 3, can actually terminate the lease agreement. Just by you asking permission to assign the lease, the landlord can actually terminate the lease agreement. Now here it says that landlords shall have the right to revise the minimum rent to be paid during the remainder of the term or greater than the current market rents for the lease premises, or 15% greater than the current rent. So the landlord could say, sure, I've got no problem. I'm happy to assign the lease to this buyer that you've brought to me. But just so you're aware, I'm going to increase the rents by 15%. Now, I know if I'm that buyer and I've just agreed a price with you, and I get told that rents are going to go up by 15%, the first thing I'm going to do is I'm going to knock 15% off my offer. Again, this is very common that we see. A lot of leases that were not really structured, not really written for a healthcare specific tenant. And here we see that the landlord, should the tenant receive any form of rental income, cash goods, any form of consideration in conjunction with the assignment of the lease, that is over and above the current base rental rate, any difference between the annual rental rate and the rental income or consideration shall be paid directly to the landlord within 30 days. So if you're paying, say, what we talked about earlier, $5,000, say $60,000 per annum in rent, and you sell your practice for $500,000, technically written here, the landlord is entitled to $440,000 of consideration. Now, you do not want to give the landlord any money that you've worked extremely hard for. And finally, even after you've managed to get a sign and permission and the landlord's agreed to assign the lease, now saying that you shall not be released from any obligations under the lease and you remain liable for any failure of the tenant or its assignees to observe each and every covenant of the lease. Now, in some cases, yeah, you may have to provide some sort of continuing liability for a year or 2 years, just while the new doctor settles in and the landlord is comfortable. But what you don't want to be doing is providing continuing. You don't want to be on the hook for the remainder of the term. And we had a doctor that was retired and literally got a phone call. I think he was on the beach. It was 4 years after selling his practice that the buyer had taken on too much debt, built himself a nice fancy house and car, and went bankrupt. And the landlord phoned up the selling dentist who had retired 4 years ago. The last thing he wants to do is go back and start practicing dentistry. So again, one provision, there's at least 5 red flags that are found in 75% of dental office leases that can prevent you selling your practice, or at least make it extremely difficult and can cost hundreds of thousands of dollars to actually have the landlord agree to sell to assign the space. Now, for the interest of time, we're not going to go through all the other provisions, but like I said at the beginning, there really are 20 or so critical clauses that can impact your business. We talked a little bit about demolition, relocation. We've really made a name of trying to include a death and disability provision on any new leases that we've negotiated, whereby, God forbid, if something was to happen and you were unable to practice wet finger dentistry, whether it was from, being incapacitated or worst case scenario, you passed away, this will enable your estate to terminate the lease agreement regardless of the number of years remaining. Now, this is just one slide that I asked to be added because we actually, one of our lease negotiators originally worked on the landlord side. And I think that this slide is fascinating. It just gives an insight to how the landlord and how they are thinking. So we recommend that you should start to engage the landlord, or at least start the process at least 2 years prior to your expiry. And the reason that we say that is, like we talked about, one, The main thing, it gives you a lot of leverage and a lot of time in case that there is a problem and you did need to relocate, or maybe you wanted to relocate, maybe you didn't like what was being offered. It gives you a lot of time. Now, in many cases, the landlord will say, oh, you know, you've got loads of time, or doesn't send back, doesn't reply, doesn't take calls, or it takes a while to get back to you. You suddenly get into the sort of 12 months remaining, 8 months. What they want to do is they want to get you as close as they can into the red, because they know once you're into that sort of 6 months prior, and you know there may be an option deadline. If you miss that option deadline, that critical date, that option becomes null and void. And if they can get you into that red, that the chances are that they know you're not going to be able to move because you don't have enough time, and they really have got you where they want you to be. So it's extremely important that we start the process when it comes to lease expiry or lease renewals at least 2 years before expiry. So we are seeing an unprecedented opportunity now to the lease renewals, to reset some financials, offering long-term lease renewals. And when it comes to kind of expanding or new starts, financing is at some of the lowest rates of our lifetime. Equipment and supplies, again, Henry Schein will sure be very much like to have your business, and very competitive pricing. And landlords desperate to fill vacancies. So what are some of the strategies and tactics for winning lease negotiation? Why have we been so successful for over 25 years now? I mean, you see over 100 5-star Google reviews. Most clients, it's just the best money that they've ever spent on their practice. So how have we been successful? Well, just to give you a little example on how, you know, our process and how we work and how we've been successful is, you know, the first thing we do is gather all the documentation, not just the existing lease amending agreement, 2-page renewal. We will look at all original leases, any amending agreements, any estoppel, any assignment, any documents. It's important to gather all the documentation. We then spend time identifying some of your, you know, career goals, what you're looking to achieve, where you are in your current practice, to try to strategize and align the lease with your career goals. We would review the office lease for any risks, any liabilities, any areas of concerns. And we then prepare our market research. We pay for a lot of data whereby we look at some of the demographic rent comparables, vacancy rates, really do a deep dive within the actual space where you practice from, the area, type of building, who the landlord is. And then we develop a strategy. And all of this we've done, and we haven't even reached out to the landlord. The mistake that lots of, and I really hope that, you know, none of you do this, and you may be frantically looking for your lease later tonight, or you may be frantically looking to speak to your landlord and see if you've got this in your lease or certain things we've talked about. The mistake that is made commonly is, you know, your area of expertise is being chairside, not negotiating leases. And, you know, I would certainly not want to do any restorative work on any patients because I don't have the experience. And it's exactly the same. I don't want to get into a conversation with the landlords. This is what they do every day, and this is what we do every day. We know how to have the conversations. We know how to, you know, have that sort of compelling story to explain that, you know, you're a very good tenant. You always pay your rent. You have a very low default rate, and there's certain things that to build your business and to help grow your business that you need to address. Now, again, all this is before we've reached out to the landlord. Once we actually reach out to the landlord to start the negotiation process, there's at least 15 to 20 hours of back and forth when it comes to the financial economics. And again, there's 6 or 7 different variables when it comes to the financial negotiations. There's the rent, the base rent, the rent escalations. Is there any free rent? Is there any fixturing period? And is there any landlord work? Is there any tenant work? What does that financial package look like? In some cases, there may be tenant improvement allowance, but is it worth $20, $30 per square foot of tenant improvement allowance if that's just going to be factored into the rent over a longer period of time? And then we negotiate the legal provisions. So there's, again, at least 15, 20 hours of red line and back and forth negotiating some of the legal provisions. What we're trying to do, we're not trying to go in guns blazing and upset any relations. We appreciate that, you have to work with these people and maintain a relationship. In many cases, the landlord or the landlord's representative who knows us and is actually quite happy to deal with us. It takes away some of the emotions when the doctor or when they're dealing with it themselves. And in many cases, we've actually improved the relationship. And again, we're with you until you have a final executed lease agreement or amendment that you're satisfied with. We have a critical and dates and risk analysis. We spend 3 to 4 hours analyzing your lease for traps. We would then schedule a call to cover, go over your sort of current situation, vision plan, uncover some of those traps and what that means, what that means for you, and what the ideal lease should look like, and how to negotiate effectively a tactical plan. Thankfully to our sponsors at Henry Schein, and for all of you attending, I'm delighted to offer a complimentary personalized lease review by myself. It really is very beneficial. Like I said, spend 3 to 4 hours reviewing the existing lease. And if you don't have a lease, or if you own a building, or if you just want a consultation, then I would strongly suggest that you take up this offer. It is on a first come, first served basis. Again, you can email info@cirrusconsultinggroup.com. My personalized cell number, my telephone number there, and you will see a poll come on the screen now. If you are interested in the complimentary lease review, if you could just take a minute to fill out that closing poll. I really appreciate everyone, and again, apologies for the slight technical hitch towards the end. Again, please take a minute to fill in the poll, and if you are interested in a consultation, then I would be more than happy to discuss that in more detail. It is on a first come, first served basis, so as soon as I receive confirmation that you would like to set up a consultation, or if you have existing lease at the practice, whether it expires in the next 6 months to 2 years or 5 years, again, more than happy to spend some time and discuss the situation. So again, I really want to thank everyone for taking time out of their evening to join me. I'm just going to leave the poll up for a little bit longer. If anyone has any questions, there is a chat section on the Zoom. We have got, if everyone is, I know we've just run slightly over, but we'll take a few minutes to answer any. If anyone has any specific questions, please feel free to use the chat section. There is actually one question here I can see saying that my landlord was an extremely difficult person to deal with, and when we first negotiated, he really didn't agree or wasn't very forthcoming to anything that we wanted originally. Again, all I can say is I don't know your specific situation. I don't know if it was yourself or who actually was negotiating the lease. But I can tell you, if I had like $1 for every time I've heard someone saying my landlord, he won't do anything, and he's never changed, and he won't change anything, and how many times we've actually been involved, and not only have we negotiated extremely successful lease, but we managed to get, managed to change some of the assignment language, managed to remove some clauses, and really, really got some success out of it. Again, it's how you tell the story, how you're compelling that argument to the landlord, and every negotiation there is give and take, but it's a choreographed game of chess or poker, depending on what your preferred game is. But again, like I said, this is what we do each day and every day, and we're not remunified. We don't charge a commission. We're remunified directly by you, the client, and we're not asking the landlord for any money. We're educating the landlord about the type of tenant that you are and why you are the tenant that you'd want to have for a long term and want to have that long-term relationship. So that really doesn't faze me or faze us at all. Anyone, any other questions? Again, I appreciate that we've gone over time now, so I don't really want to keep you any longer, and I hope that you safe journey home, or if you're at home or wherever you are. I wish you a nice evening, and I look forward to speaking to many of you in person over the next few days and weeks. So thank you very much, and that concludes tonight's CE Dental Seminar.